join us today on the Portfolio Strategies team. It's a happy St. Patty's Day around here. Agreed, guys? Do a little celebrating. And ironically, I've been in Europe over the past couple of weeks, and Ashley and Franklin have just done a phenomenal job in giving you the vlogs and information that's been going on. I was over there for a couple of reasons. One, I was able to speak at a conference. And two, just from the standpoint, as I like to say, boots on the ground, to really get some insight from Europeans as to where they think the economies are going and from a global perspective. So on the St. Patty's Day, it's appropriate for us to talk about global aspects and how it impacts our markets. What's funny is that while in France and other parts of Europe, is that the big theme was the United States may be the growth economy of the world right now. And here we are in the United States, and we have doubts and hesitations, and yet our European colleagues over there see tremendous strength in our economy. So on that note, what I'd like to do, Franklin, why don't you start us off? Okay. And then Ashley will come to you because I think you've got some to talk about China. Is that right? So let's talk about U.S. economy. And this past week that we had some volatility and down market.
Yeah, we did. Well, last week, as you guys know, and to share, markets were down about 2%. Stock markets were mainly on concerns over three things: the Ukraine, China, and I know Ashley's going to talk about that, in Japan. The key things here, the Ukraine issue is still fluid. We're watching that very carefully. The Chinese and the Japanese markets are the second and third largest economies in the world, respectively. We're clearly far and away number one, but we're watching that as well, and that can have a negative impact. There were three things that we were watching last week: jobless claims, retail sales, and producer price index. Jobless claims were lower than expected. That's great. Retail sales were better than expected. That's terrific. I've been joking about this for a while, so I want to come clean on this, about laughing with the weather related and going out and looking for an automobile. I'll just go ahead and put the shoe in the mouth. Retail, part of that was being driven by auto sales. So they were dragging their kids out to look at cars in 12-degree weather. So I stand corrected. The producer price index showed no inflation. Now, here's what's important for everybody to understand. There's two components to this. Number one, it gives the Fed the opportunity, should they choose to reduce tapering or continue at the pace that they're going, it gives them that opportunity. The second thing is it allows them to keep short-term interest rates low. The third component that you've talked about, Greg, on this, that we need to be aware of, is deflation. And there was some signs of deflation in that report, so we're watching that very carefully. But net, good economic data on our part. This week, there's actually about four things that we're watching. Janet Yellen speaks this week. This is her first quarterly press conference, so we'll be watching that. That's important. We've got industrial production today, so that'll show us kind of where we are in that cycle. We've got housing starts and the consumer price index, so we'll see the housing market. We'll also take a look at inflation as it relates to the consumer. Last week was the producer. And then we've got existing home sales that we'll be watching. Now, last but not least, just to kind of, as we look at the stock market and kind of get a feel for the fundamentals and what's going on, kind of pulling the curtain back, a lot of what we're seeing is interesting stuff. The VIX, a volatility index or a fear gauge, has kind of gotten extreme, so it wouldn't be surprising for us to see things move back. And something else that we look at is the euro-yen cross rate. That is a risk-on, risk-off type of thing to watch. We watch that very carefully. That too shows signs that we could see higher prices from here. It's anybody's guess. We monitor this, but those are just some positive things that we're seeing in the marketplace.
When you mentioned about Janet Yellen, I had in one of my discussions, somebody looked at me and said, "Well, Janet Yellen is very different from your previous Fed chairman that you've had." And of course, I'm immediately thinking, well, of course she is. She's a female,
right?
And the person looked at me and said, "Think of Volcker, Greenspan, and Bernanke. Now Janet Yellen, she has hair." And I thought that was great.
That's really good.
So the Europeans are very big on Janet Yellen.
That's great.
In her strategies. So Ashley, talk to us a little bit more about this China issue.
Well, we will. The guys and I were talking. You know, we were 2.5 months into the market year here, and of the rundowns we've had, a little more pronounced in January. As Franklin said, off about 2% last week. The Chinese data has been a major part of that mix both times. Now, not singularly. You know, last week was Ukraine mixed in there, but China's a big ingredient in the gumbo. And what we want to do this morning is just kind of remind you a little bit why that is. Part of it is they are down and they're slower.
Right.
But more importantly is how they're trying to shift their economy. We just wanted to come back and sort of remind you that they've got some growing pains with that.
Yeah.
Where they are in terms of growth, you know, last 2 or 3 years, they were clicking along at a GDP growth rate of 12, 13, 14%, really steaming it. Well, it's about half that now. Yeah. And really, if you look at it from a year-to-year growth rate, they're sort of flirting with about a 15-year low. So we're not trying to suggest that the fundamental shift is all of it. They are slowing some, but at the same time, a lot of that is self-induced, and this is what we mean by that. If you go back and remember your textbooks, when we all remember them having the 5-year plan, the 10-year plan, the 15-year plan under communist governments, what were they normally doing? Infrastructure projects. Big dam, big railroad, big airport, large high-rise building, that type of thing. That's really good for a while. But at some point, what you have to do is you have to convert your economy more, and what they're trying to do is convert it to more of a consumer-driven economy like we do. You can't live forever building your 10th airport in Shanghai. You just can't do it.
Well, they've got areas where there's buildings like apartments, but nobody's living there.
Absolutely, because as Greg suggests, property bubbles have gone on.
Right.
So overall, you know, we are getting some downward thumps in that, looking on the data. But what the Chinese are trying to do, we would all agree, long term is good. They're trying to have their market more replicate ours, and that is about 70% of the effect driven by more of a middle-class consumer spending, rather the high amplitude that you get of a large dam built one year and no dam built the next year. It's a wide amplitude. So we're going to have to kind of suffer through that. And finally, I'll say, you know, we've had monetary and fiscal policy we've mixed together for a long time. We know how to do that. It's still relatively new to them. So they're kind of learning as they go. But we all agree in the long run, they're making a shift that is good, but we're going to have some gyrations like that in the market as they continue to do that.
Yeah.
But we're continuing to watch that.
Sure. Well, and you know, as having been to Europe, talking about China, one of the themes in Europe, and Franklin talked about this as well, is that you know, the Ukraine situation, they're very much watching that scenario and how it impacts them. It's hard to believe, but this is the 100-year anniversary of World War I.
Yep.
Well,
And it's the 70th anniversary of D-Day. And I had the opportunity to visit Normandy. And if you ever have an opportunity to do that, I would encourage you to do so. It's very, very touching, and it's hard to fight back the tears when you see what those people achieved. And on that note, it's just a reminder that here again, the United States economy is still viewed as the hope and the future for the rest of the world.
Sure.
And it was a huge honor for me to be over there and to see not only from an economic forecasting standpoint, but also how they view our economy. So we hope you have a great, happy St. Patty's Day. We're going to keep you informed here. We've got some volatility in the markets, but the good news is in our country, there's a lot of positives going on. Things are so dismal right now in Japan that, you know, the young generation is not marrying. They're hardly even dating because they don't see the future. And we think we've got some bright things going on here. So let's keep in touch, continue all the emails and phone calls and interaction that we've had. We come up with these topics based on your feedback. And then the other thing we greatly appreciate is when we get those phone calls from people that you've been forwarding the vlogs to that saying, hey, I've seen your vlog from a friend of mine who's a client of yours and want to talk to you some more. So happy St. Patty's Day. Talk to you soon.